as we can see on screen here now, we have two ICT order blocks marked out. And if you want to gain all the knowledge you need about the ICT order blocks, I recommend you to watch my video about them. I'll put a link to that in the description. This video is mainly going to be highlighting the differences between the ICT order block and the SMC order. So on screen right here, we have a nice ICT order block. We have all the things we need. So first off, we have a sweep of liquidity. We sweep this liquidity and also this liquidity. And then we have a strong move down that also has market structure shift. We also leave behind imbalance right here. What we can then see is that we continue moving down. We then come back, we tap into the order block first time. And once we do, we actually rally on down quite cleanly, taking market structure again. So shifting market structure again, we sweep the sell side liquidity, which is on its turn the market structure shift. And what do we leave behind? We leave behind another ICT order block. And that's where it kind of starts to become puzzling, right? Because what does the rule say? We need to take some kind of liquidity. We could argue that we indeed take liquidity right here, because these are relative equal highs. So we actually take some form of liquidity. But then it says that you need to use the candles before the move. All of these candles right here would have to count as the order block, which would result in your order block looking something like this. So this whole thing basically becomes your order block. Now, when it comes to taking entries and managing my positions, I don't want to be managing it like that. And that's where the SMC order block is actually going to come in handy. Just considering this whole part as an order block, your stop would be massive. So what people then do is they actually invented the SMC order block, which basically says that you can use a sort of logic that comes down to supply and demand. And what a lot of people do is before the down move, so the move that actually broke our structure, which would be right here, the top of this move, the up close or down close candle before the strong move up or down, that's going to be your order block. And you also take into consideration the wicks that are on top. So a perfect SMC order block in this case would be something like this. You always take the lowest or the highest point of the candle body and then target the wicks that are above that. So this is going to be our complete SMC order block. That's the SMC order block. And again, this would be the end of the ICT order block. So there are quite a bit of differences. The only actual useful way for it that I found, especially with ICT, is if you need to refine such a massive order block. If you're going to do that, your stop is going to be wide, your entries would be messy. So that's when SMC order block actually comes into play. And when it comes to picking high probability SMC order blocks, you again need the exact same confluences that you would with the ICT order block. So you would need some displacement, which we have. We also need a form of a market structure shift. So not a lagging move down, but a really clear move down that also takes market structure that forms a high probability SMC order block. So again, when I use the SMC order block, I basically use it and look at it as an ICT order block, but I am not going to be calling it a ICT order block because that's not how Michael teaches it, right? And he teaches the ICT trading style. So that's why I call this the ICT order block. And you have a bunch of variations on that one, right? And it's mainly used to refine people's entries in their trading plans. And it's been manipulated so many times that there are going to be so many different versions online and out there. But when it comes to trading my style, so let's call the identity FX style, I would use an SMC order block like this. And also when we see really big wicks, I would also use that as an SMC order block. So when it comes down to refining my order block, if I want to really sniper entry, or I don't like the R that this current order block is providing, let's say I wanted to enter on the order block and I would put my position here and I'd cover this. My target would be the sell side liquidity, and I say, okay, I'm not happy with this 1.88 RR. What I dare to do is actually move my stop up and basically refine my order block, something like this. And that's where my entry could be. And the reason for it is that because there is fractal nature in these candles, right? So there is something alive within these wicks. And we will see that as soon as we jump to the lower time frames. So this is the exact same entry from the 15 minutes. And what do we see? We actually see that the order block starts right at this point. So that's where these wicks were. When we refine it, we can actually see that on the 5 minute, we have a high probability order block laying there. So what can we expect? If we were to be bearish and price action would be with us, we could expect a move that looks something like this. We tap into that order block and then move down. So that's the logic behind an SMC order block. I use it in the same context as I would use an ICT order block, but I just use it to refine my entries, manage my positions, and so much more. And I would say the supply and demand order blocks, forget about them. Completely forget about those, especially when it comes to ICT trading. This is exactly what forms a high probability order block, and there is no other logic behind it. Of course, you have to follow market structure, but as soon as there is too much liquidity building up above such an order block, you will see it gone, and it will be invalidated as a decent ICT order block. Because of course, at this point, would we want to look at it as an order block? We don't really have any sell side liquidity remaining. So what's the logic from ICT now? Well, we're going to target buy side liquidity. So would it actually be a good idea to take this trade? I'm not so sure. Perhaps we could be targeting these lows again, but always keep in mind that liquidity is going to be so much stronger. Liquidity and imbalance is going to be so much stronger than these order blocks by themselves. If you're expecting a clean delivery to a certain point and your bias is bearish, then you can use them. But don't just trade off of order blocks without actually thinking about liquidity and everything in mind, because that's what supply and demand is, right? Supply and demand strategies, they usually have a really, really low win rate because order blocks don't seem to hold. Get tagged out of your trade so many times, and I'm sure it has happened to you, at least if you've looked into SMC concepts. And that's exactly the reason, because people tend to forget to take liquidity into account. And that's a problem with so many SMC strategies out there. They all forget about the core concept, which is liquidity. I think if we have to rank the strengths of the concept in a list, I would say liquidity is king. That's followed by imbalance. And then, of course, we can use the order blocks if the bias that we had for the day was right and is right. Now, let me give you some more examples here of ICT order blocks that can actually be refined into SMC order blocks. All right, let's, for example, look at this price action right here on the euro dollar. What we can see is that we have price sweeping liquidity right here. We have a high here that's swept by this. We also have this candle being swept. We can classify this as liquidity being taken out. We then have a strong move down, and what would be the ICT order block now? The ICT order block would be this. So once again, you could possibly take an entry from this, but let's say you want to take an entry from the order block, cover the whole order block with your stop loss, and then be targeting the sell side liquidity. And in this case, this would provide you with 1.9 R, which is decent. But let's say you wanted to target some more. What you could then do is use a couple of logics. So you could target the equilibrium of the order block itself. It's something that a lot of people do. Or you could refine your order block. You could be using the last candle again. So use the body of the last candle. And I'm not saying that price is always going to be tapping into it, but now you just turned that 1.9 R trade, you just turned it into a 7.7 R trade. You see? So you actually have so much more reward compared to the risk, which is just beautiful. So this is a refined order block. And again, if we were to go look at a lower time frame, so let's go to the 1 minute, for example. If we go take a look at this price action, what we can see is that this refined order block where we actually took the entry off of basically looks a lot like our ICT order block. This would be our ICT order block. We move the position to the side for a moment and remove this big order block. As you can see, this would be the ICT order block. And that's just where our entry is. You see? And then price respects that and bounces off of it and moves all the way down. So that's how I use an SMC order block, which I don't dare to call a ICT order block because it's basically a refined version of it. I don't per se have to come down and take a look at the lower time frames. No. If I'm looking and taking trades of a 15-minute chart, I will only be eyeballing the 15-minute entry. Or if I take a trade off of the 5-minute time frame, then I will only be looking at the 5-minute order block. But I just keep in mind that within those wicks, there's probably some form of an order block residing within that anyway. All right, and then we can actually move to the side here. Once again, if we take a look at what the ICT order block here would be, because again, we have our market structure shift. We do sweep the high of this candle right here, so we take some liquidity. What would be the ICT order block? The ICT order block would be this. And again, price respects it, so it works out perfectly. But if you were to refine the order block, you could move it to something like this. This could actually be your order block, because there are no real rules to actually refining your order block, right? So this would be the actual proper ICT order block, and this would be your refined SMC order block. And that is actually the only way I use the SMC order blocks. And they are basically the same, just my own version of it. It's very important that you don't teach people, if you ever go and teach or mentor people, don't tell them that this is the ICT order block. Always mention that this is your own variation of the order block. And that's how you're going to see me use order blocks on charts sometimes. And I know that it might be confusing. So next time I will probably mention that I'm using an SMC order block. So an order block that's actually been fantasized by myself, which SMC in essence really is. SMC is just an inspiration from ICT concepts. And we all classify those supply and demand and all those crazy smart money strategies as smart money concepts, but they all come back from our ICT concepts, right? So that's why it's important that I would not be naming this an ICT order block, just an SMC order block. And I'm sure that you're going to be able to see the advantages, but also the disadvantages. But because let's say you wanted to take a trade off of this order block, if you would have taken the trade ICT style, right, cover something like this and target the sell side liquidity, you have a 1.27R trade right here. And if you would have used the refined SMC order block, covered something like this, you had potential for a 4R trade, but it didn't play out at all. So you just made nothing. And that's what you're going to see happening. So it's always, the first thing you need to do is always look at your data, right? Start looking if you can actually refine order block entries, if it makes sense, if you see more profitability on your account if you use it. But don't just blindly start refining order blocks, because you're basically pulling the core of the concept itself apart. And at some point it will no longer make sense. And it could even be that you're missing more trades than you're taking. So at that point, it might just no longer be worth it to use refined order blocks. So that's my 2 cents on that subject. I hope you learned something from this video and hope you understand why I use 2 different order blocks in all of my videos now. Next time I will definitely mention that I'm using ICT order block or my own SMC order block. And if you have any questions related to this whole subject, feel free to hit me up in the Discord. I'm really glad to hop into a call with you and explain it a bit further or come back to your questions. The Discord link will, of course, be in the description. It's completely free, so feel free to join. And I will catch you guys in the next video. Take care. Bye-bye.